Hey, yeah, what? Grab your bootstraps, yeah, let's scale your growth. Here's the truth, Jack. We'll reach the globe, unveil the notes.
What the
pivot, earn your digits, won't burn, you'll get it. See, this is factual. Funds will show, learn to flow with Candid Capital.
This is a Candid Capital interview. In these episodes, we host industry business professionals involved in the global tech ecosystem to discuss various topics related to tech, global economy, and building sustainable businesses and investments. Welcome to the Candid Capital Podcast. In this episode, we are diving into the future of financial access, the gig economy, and inclusive fintech solutions with José Fernández, CEO and founder of Bankuish, and the recent winner of the 4 years from now pitch competition in Barcelona at Mobile World Congress. Welcome, Jose. Thanks for joining.
Thank you, Josh. It's a pleasure to be here.
So after your big win at 4 years from now, I was thinking it'd be nice to have a conversation about building Bankuish and kind of the topic around solutions that fit credit for modern workers in the economy. But before we get into that, I kind of like to know what your origin story is and how you ended up as an entrepreneur and in fintech.
Of course. Yeah. I'm originally from Madrid, Spain, and my mom likes to remind me that I've spent more time outside the country than inside. I was a chartered economist. I am a chartered economist in Spain, and I dedicated my whole professional life before being a founder to risk in banking. So I led a risk team in Banesto, a bank that was acquired by Santander Bank some years ago. Underwriting for credit cards and ING Direct, different European banks that I served in the risk or underwriting teams. And in that experience, I realized that the types of data that banks use to be able to make decisions on credit, on access to financial products, is very limited. It's very traditional. These definitions of risk have been, and creditworthiness have been defined, over 100 years ago, and they have been barely changed. And then I was sent to the U.S. By my government as a trade officer to help Spanish companies internationalize into foreign markets. And it was then that I met, in my tours around Silicon Valley in California, Silicon Alley in New York, and I was introduced to a bunch of founders, and it's one of those moments when you meet your tribe. I was in awe of these individuals, trying to disrupt $1 trillion markets with a laptop on a coffee shop, and I was like, I want to be that. I want to do that. And it took a few years, but eventually I was able to get a visa in the U.S. to start my first startup with two co-founders born and raised in New York, to create Atlas Money. My thesis then as a founder was the same as it is now. It's and it is that to bank underbanked communities, you don't have to redefine the banking ecosystem. All you have to do is get reputable financial institutions like the ones I used to work for to feel comfortable with these communities that for some reason feel foreign to these banks, these insurance providers, these traditional reputable financial institutions. So what we did with Atlas was we were focusing on low income areas, low population areas, places where bank branches made little sense. And what we did was we leveraged mobile phone technology to be able to give microloans to these individuals and these families and in these rural areas. And we partner with large financial institutions so that the repayment of these loans was creating a credit history with large banks. So the idea behind Atlas was, if you take a few microloans with us and you pay them on time, big financial institutions, big banks would be able to see that you are a dependable person, that you pay your debts, that you're organized, and you could essentially graduate into formal banking. that operation, even though we were headquartered in New York, grew a lot in Western Africa, in Senegal, in Ghana, in Nigeria, and through that experience, I got to meet a lot of gig workers, and I was amazed, at the kind of information that they had in their apps, right? Like Uber drivers, they had a ton of information. You could have been doing this for years, and you had a ton of information in your phone app of how many dollars you're making per ride, how many how many rides you've been doing, the number of stars you're being awarded for your work, comments and feedback on that work. And I believed that as a risk, as a member of a risk department in the bank, if I had that kind of information, I would feel a lot more comfortable issuing a credit line, approving a principal amount for a loan, than if I didn't have that kind of information. That's essentially how Bankuish was born. It was a mix of that, and also I guess I always have to say it was also the seed of Bankuish was also born in me when I first moved to the States, right? So this is I lived for 13 years in New York. I've been living in Miami now for 3. And when I first moved to the States, to New York City, I was trying to get an apartment in Manhattan, and it was really hard, right? Because when any landlord went to run my credit check, it came out empty, right? Because I was not from the U.S. I was from Europe, from Spain. I did have a paper from my employer saying, how much money I was making and establishing that I had employment. But it didn't matter. Once they run the credit check and it came out empty, no one wanted to sign a lease with me. And that was my first encounter with being outside, being a no-file person in the U.S. And it's fascinating to me when I started to scratch that surface. I realized that 45 million Americans are currently in the U.S. No file. 60 million Americans are thin file. That means that over 100 million Americans are essentially barred from a lot of essential financial products. And this is because credit bureaus have, again, a system that has worked very well for people with W-2s, with employment, with salaries, with monthly salaries. It was a system that was designed 100 years ago, and it's a system that is based on negative data and positive data. So negative data, when you miss a payment for your student loans or your auto loan. Positive data could be that you've stayed in the same address for a long time. That's building positive data. But very importantly, it is obviously if you're paying things on time, that's positive data. But very importantly, your salaries, every salary as a W-2 is slowly building up positive data, whereas your income as a 1099 does not. So that's a crucial difference between 1099s and W-2s in the US and all around the world, where if you have a salary, you're building positive data. If you're a project-based employee, you're a contractor, you're not building that positive data through that income. And the key here is that Experian, TransUnion, and Equifax, the traditional credit bureaus, in these models, their negative data almost never expires, which means that a default on a payment that you did maybe 10 years ago is never going to expire. The idea is that you will build more recent positive data that outweighs that negative data. But if you're a 1099, your choices, your ability to outweigh that negative data is severely reduced, right, compared to a W-2. So that's what we see. We see subprime individuals that don't deserve to be. We see thin files and no files that when they go to get any form of financial product are being denied because the banks. And I always like to think that Bankuish is a diplomat that understands the two sides, right? The gig workers, the contractors, but also understands the banks. I've been on the underwriting side of a bank, and I have to be mindful, right, of who I lend the money of the savings accounts of my clients, right? It's a serious responsibility to take care of the money of the people that trust that money to your institution, right? So what we want at Bankuish is to build that bridge with data, with this alternative data, so that banks can offer financial products within their risk appetite to the right people within the future of work, right? People that don't have salaries.
So a couple questions. So just going back to your first startup was Atlas.
Hmm.
Um, and so with that one, did that one just turn into Bankish, or is it a completely separate company?
Completely separate company. So that foray into entrepreneurship was very successful in giving formal banking to tens of thousands of families that had, in very rural areas, very low income areas, had never had access to formal credit, and we had successful partnerships with Barclays Bank, with Echo Bank, with a bunch of very large financial institutions. But it was then that I realized that I believe, and this is something that I tell all the founders that I I get to share my journey with. I tell them, if you have a product that helps people, you have a responsibility to scale it. You have a responsibility to get it to as many people as possible. And the thing about Atlas is its scalability was very limited, right? You had to give the learning curve for a bank, the process for a bank to trust an individual took many microloans. The ability to give these microloans in rural areas and low income areas was very difficult to scale. And again, we were going for agricultural areas, so
So for
technology.
that one, because you mentioned you were in West Africa, so you were going to emerging markets first. Was that kind of the strategy?
Yeah. Again, I left banking and diplomacy to become a founder because I believe in the impact that aligning your technology and your service, the value that you give, with the impact you can have is something worth doing, right? So I tried to look at where could this help, right? And out of all the pain points I could see, I went for the biggest one. And that was growing a lot in Senegal, Ghana, and Nigeria, which is in the rural areas of these countries in Western Africa.
So did that make it are you currently there with Bankish? Was that like a natural starting point for you because you already built a business there?
I don't understand the question.
Sorry, with Bankish, are you in those markets as well as?
So that's a great question. So no, Bankuish is not currently present in the continent of Africa. But what I did was, when I decided to do Bankuish, again, I love macroeconomic studies, right? And I needed three things for us to launch in our first market. I needed a big gig economy, currently a big gig economy, a fast-growing gig economy, so it had to be growing. It couldn't be stagnant. It couldn't be mature. And then, very importantly, a huge financial pain point, right? So even though, for example, we currently are present in the U.S., we didn't start in the U.S. because the U.S. has usury protections, right? Even though the U.S. has a huge gig economy that is fast-growing, but McKinsey says that in less than 2 years, there's going to be more 1099s in the U.S. than W-2s. The U.S. has usury protections, which means that we can't be charged more than 35% APR on a credit card. There are limits to the interest rates that you can be charged and to the repayment mechanisms that you can be forced to go through. These protections don't exist in many countries, right? And I realized that this marriage of these three things, large gig economy, fast-growing gig economy, and huge pain points for financial inclusion, were most severe in Asia and Latin America. I had a background, I had language and connections in Latin America, which is why Bankuish first, I guess our first commercial, the first time we launched in production was in Mexico. But I actually moved when I launched Bankuish. I moved in the middle of the pandemic to Brazil because I thought Brazil was the perfect market. That story is interesting. And the reason for that is in both markets.
Let's go back. Let's hear that story. I want to know why that's interesting.
So I decided to pack my bags. It's March 20. It's March of 2020, in the middle of the pandemic, and I'm I go through all these numbers, all these research, and I realize, okay, Brazil is the best fit, right? It's just the gig economy doubled during the pandemic. It was already huge, and it's doubling again, doubling, and incredible growth numbers in gig economy, and then I start to scratch into the surface of the financial inequality, the banking inequality in Brazil. It's amazing. So there are 70 million negativados in Brazil, which means that there are 70 million, half of the adult population in Brazil is essentially barred from all financial, from all formal banking, because the credit bureaus deem them negativados, which means it's like worse than subprime here. It's like your negative prime, right? Your credit score is negative. We do not want to touch you. And these people were all contractors. It was like another case of lack of positive data. But there it was taken to the extreme where they're literally blacklisted. Now, the problem there is that there are no usury caps, right? There's no limit to the interest rate that you can charge, right? Which is, again, think about it. There is no legal limit to the interest rate that you can charge for a loan, which means that when you ask these gig workers, once they're being denied formal loans from formal banking institutions, what do? They go to predatory lenders that charge them anywhere between 400% annual interest rate all the way to 2,000% annual interest rate. Absolutely terrible financial products. I was like, okay,
that's insane.
That is insane. It's absolute serfdom, right? It's real 21st century serfdom. And they're very aggressive about their repayment tactics, right? So I say, okay, this is the market. I have to go to Brazil. I get a friend of mine. So Brazil is in lockdown. You can't move in. So I get a friend in Brazil, a founder, to give me like a job offer, because they do let you fly into the country if you have a job. You're really looking for a job. So I get this job offer. I go to Brazil. I rent a car. I do some rounds as an Uber driver and an iFood courier to try to understand the dynamics that they're undergoing. And I quickly realized that the Brazilian, this is the same for all the gig economies, but it was the first time that I lived it in my own skin. The gig workers, they're very cohesive, right? They're a community that is very cohesive, both physically and digitally. So physically, near the international airport of Sao Paulo, there's this this kind of like empty lot where people would park their car and have coffee and talk while the app is finding you, right? Because you can't wait in the airport. And there I got to meet a lot of these people, and I went there with a very easy pitch, right? Which was, and I'm not fluent in I wasn't fluent in Portuguese. I was doing my portuñol, which is kind of like a mix of Spanish and Portuguese. And I would tell them, hey, I'm trying to build a more fair Serasa. So Serasa is the biggest credit bureau of Brazil, right? They have a quasi-monopoly on credit decision in Brazil. And Serasa is a name that is feared, right? When you say Serasa, it's always bad, right? You don't want, Serasa it's not understood as a credit bureau here, which is like an enabler of credit. There it's the guard for credit, right? It will not let you in. So when I say I'm trying to build a fair Serasa, a more fair Serasa for a more fair version of Serasa for gig work, I was quickly added to like a bunch of WhatsApp groups, Telegram groups, Facebook groups. And that's when I realized like 50,000 members for the Sao Paulo Uber driver Facebook group, and then thousands of members in all these Telegram groups, and then hundreds of members per WhatsApp group. And they're all helping each other. They're all assisting each other. They're all doing like different versions of group loans where they all pitch in so that they can give money to someone that, their car broke down and they can't find access to financial products. Like the pains are very severe. And there, the LGBT laws, which is kind of like the GDPR laws, the privacy laws of Brazil, they make the data their property, not Uber's property, not Didi's property, not the companies, right? So these companies had to offer a way for you to access that data. So it's possible to download, just like it is in the US or Europe. It's possible to download, or in Mexico. All these countries have passed versions of the privacy laws that Europe championed, and you can download that data, right? So I went through the process. It's not a friendly process. It's meant to not be easy to do on a phone, which they understand that gig workers don't have laptops, so they do it on purpose. But you can do it, and then you can extract it into a CSV. Some of them are really nasty, and they make you download it as a PDF file. So imagine thousands of pages with GPS locations per ride, amount of money made, number of stars awarded by end users, cancellation rates, timestamps, tags, feedback per ride, dozens of rides per day, years of historicals, all in a PDF file. So it's really nasty. But you can download the information, right? So eventually I did that with my own data and tried to build a model, an alternative risk model, right? A way of gauging my ability of future repayment of debt with the data extracted from these apps. And I needed more volume, right? I had a model, but I needed more volume to stress test the model. And I'm getting geeky here because I'm a data scientist at heart. But it was a lot of fun. And what I did was I asked in 7 WhatsApp groups if people would be willing to share this data. I showed them how to do it in a little document. And I asked if they would be willing to share this data with me so that I could build this model so I could try to, create a better credit score. And this is very sensitive information, right? These files have GPS locations for the past years. They have the money that you're making. They have the kind of vehicle that you have, if you're the owner of the vehicle, and all that. Very sensitive information. And over 200 people in less than a week through 7 WhatsApp groups shared their files with me. And again, just another testament to the pain points they're going through and how desperate they are and how willing they are to trust this guy that they don't know, they barely know, to manage this data, this sensitive data, very, very thoughtfully, right? So I build the model. Now I can stress test, and now I have something that I think is pretty robust, right? And again, all of this is happening in Brazil. So I then share it with my colleagues that work with me in risk in banking in Spain. And I was lucky enough that a lot of them are executives now in Spanish banks in Mexico. So in BBVA, which is a Spanish bank, but is the largest bank in Mexico, in Santander Bank, in Sabadell, in Mafre, all of these are very major financial institutions in Mexico, but they're all Spanish. So it turns out that a lot of them are executives there. They invite me, also in the Spain-Mexico Chamber of Commerce, they invite me to present this solution there. And I quickly find our first clients in Mexico. So even though some of my, the first hires of Bankuish, which are still in the company, are all Brazilian, they for the first 2 years, they only worked with Mexican clients because we didn't have the bandwidth to take on, countries as different and large and with such idiosyncrasies like Mexico and Brazil at the same time while bootstrapping, right? So yeah, that's the story of how, even though I went to Brazil, the idea was to launch in Brazil. I ended up, the first economic commercial activity, production level activity that we had was in Mexico. Then we, interestingly enough, 2.5 years later, after financing several thousand, helping finance several thousand vehicles for gig workers and tens of thousands of loans in Mexico, we had the financial muscle to be able to return or enter Brazil. And currently, Brazil is our revenue driver. It has been the fastest growing market in our history. It is a perfect fit. The analysis still stands that I had made years before, and it currently drives the revenue of the company.
So basically, you fleshed out your product, or I guess the data with Brazil, and then you ended up succeeding in Mexico. So are you in all of Latin America now, or just? We currently
help. We currently offer our services in Mexico, in Brazil, in Chile, in Colombia. So those are the markets in Latin America, and then also in the U.S. We entered the U.S. July 4th of last year, right? So in the Independence Day, we decided to do this big, massive party and PR around Independent Workers Day. And July 4th of last year marked our entrance into the U.S. market. We're currently, present in all 50 states. But yeah, in LATAM, our markets are those 4 countries: Mexico, Brazil, Chile, and Colombia.
So is the U.S. market, or I would say Western markets in general, typically are different than emerging markets. Are you seeing it playing out differently in the U.S.? Are you going to have to offer something, I guess, a little bit adapted for that market?
There are a lot of differences. The beauty is that our core doesn't change, right? So our core business is extracting data from gig platforms and producing creditworthiness analysis, right, from that data. And the way that banks analyze risk is almost exactly the same across all nations. It is fascinating, actually, to see how, we work with a lot of core banking suppliers, right? SAP, FIS, Fiserv, and it's amazing how we don't have to modify much of what we actually deliver to our banking partners when it comes to the variables of creditworthiness analysis, of risk profiling that we have to deliver. It's the way that works is very similar. Everything else is very different, right? So the salary ranges of of an Uber driver in New York have nothing to do with that of an Uber driver in Sao Paulo. The financial needs of a DoorDash courier in LA has nothing to do with that of a Rappi courier in Mexico City, right? The maturity of the financial products that are accessible to contractors in the U.S. are much more mature than those that are available, that the options available for gig workers in LATAM. Also, the U.S. has 3,000 banks, and Mexico and Brazil, if you serve like we do the top 4 or top 5 banks on each of these markets, you essentially have over 80% of the credit business already covered, right? There's very few banks that are very big. So it's not as a fragmented and you don't have the community banks that we have in the US, and there's a lot, everything is different, but the data that banks consume to make decisions, that is very similar.
So their decision making is different. The end or the customer, the end customer might be a little bit different in terms of the economics. And then I guess what might be somewhat different is the regulatory rules country by country. I guess that would be, or is that similar enough as well that it makes it easy for you?
Regulatorily, it's very different. The good thing is we do alternative credit scoring, and that alternative word is very, very important, right? We don't analyze your past ability of repayment. That is what credit bureaus do, and they're very heavily regulated. We currently are not a credit bureau. We are an alternative credit decision engine. So what we always make sure we state clearly is we are a complement. We're complementary to the traditional credit bureau. So credit bureaus are going to give you Josh's past performance with his credit cards and his student loans and his auto loans and his mortgages. We don't have that information. But we do have information that can make your decision making a lot more efficient and a lot more successful. And that information is around income. It's around stability, cadence, and patterns of work. It's around asset validation and identity validation. All of that information helps the largest banks in LATAM and some of the largest banks in the US to make credit decisions on these new types of employees, these new types of work. So the first 2 years, we only did drivers and couriers, right? So Uber, DoorDash, Uber Eats, Lyft, Didi, Rappi, Latamove, Beats. In these past 3 years, we've expanded that to many more platforms. So, for example, we're helping freelancers like virtual assistants, fractional CFOs, developers, architects that offer their services through platforms like Upwork, Fiverr, Workana, Freelancer.com. All of these individuals, even though their salary ranges are higher, their projects and they're very different. That all of that is for us. It doesn't matter, because in the end, what we do is we extract the data from these sources of truth, from these platforms, and we turn this data into a risk profile that banks can use to better assess your creditworthiness and offer you more financial products. The other type of that most recently, a year and a half ago, we started doing that has been very successful as well is creators. So individuals that make the majority of their income through TikTok, YouTube, Twitch, Discord, X, whatever platform. These individuals are also finding themselves with huge problems. Like I'll never forget how executives from OnlyFans approached us and said, "Hey, our creators, which make incomes, average monthly incomes that are much higher than what we are used to seeing in the creator space, are being denied financing on a vehicle. They have to pay it in cash. Are being denied access to a credit line or a mortgage, even though they might be making $30,000 a month, taking photos of their feet." That is because they go to the bank branch. They try to explain that even though they've been consistently making for the past 18 months about $30,000 a month taking photos of their feet, the bank branch of Chase or Bank of America or Wells Fargo has a hard time understanding the likelihood of that income, of that cash flow to continue, right? And we don't analyze only how much money comes into your account. We pair that with your transactional information. So for example, something we always explain is, if you only get the open banking information, the cash flow information of an Uber driver or a OnlyFans creator or a fractional CFO on Upwork, you see a very bumpy, very noisy, very irregular income. But if you smooth that with the transactional information from the gig platform that they work on, you can realize that, for example, let's say that I'm an Uber driver in Miami. My income is never going to be the same. It always varies, right? But if you look at my transactional information, you can see that I work from 8 a.m. to 6 p.m. from Monday to Saturday every week like a Swiss clock for years. That makes me very dependable. And the truth is that the variations in my income is because I work in a marketplace where the demand for my services defines the dollar per kilometer and the dollar per hour I'm making. So if there's a Marlins game, I'm making a lot more per hour than if it's just a regular downtime on the summer on August Day, right? And that is not reflected on the open banking data. So we help financial institutions understand this, understand the cyclical nature of these incomes, and understand remove the noise and better assess the future ability of repayment of these individuals through that transactional data.
Okay, so I think I kind of got ahead of myself because, whenever talking about international business, I just always have a lot of questions. So I think maybe for the audience's sake, the listeners, we should probably start with what is Bankuish and kind of run through what you're kind of doing, A to Z, just to make it make a little bit more sense.
Of course. So at Bankuish, we have one mission, and it is to bring dignity to the financial lives of the future of work. And how we do this is very simple. We turn the enormous amounts of data that gig workers, that freelancers, that creators are amassing in their gig platform accounts, and we turn this data into an alternative credit score currently now being used by some of the largest banks in the world.
Okay, so with that, the data that you're collecting, like who authenticates the data? Or is it all just reliant on the individual, or is the platform the intermediary that somehow signs off on that data? Like how is that verified?
So we have partnerships with most of the gig platforms, but the truth is that we want them, right? We want to be. I was always very focused on making sure that this solution was a solution that was helping the gig workers, the gig platforms, and the banks. But the truth is the data is owned by the gig workers. So as long as the gig workers give us access to their data, that is all we need. So what we do is we have integrations. So if you go to our app at bankuish.com, on the Apple Store, the Google App Store, in the US, you look it up as Finance. Finance.ai is the website in the US. There's this thing in California where it's frowned upon to have the four letters BANK, bank, in your branding if you're not a bank but you're in financial services. So we created Finance.ai for the US, and that's our flagship product in the US. But it's all under Bankuish Inc., interestingly enough, which is a US company. What you do is you can connect your gig platform account. So you can go and download the app. And let's say that you work for Uber and Lyft. You put your user and password for Uber, you put your user and password for Lyft, and we instantly and always for free give you a complete dashboard of metrics. You can see how many dollars per kilometer and dollars per hour you're making on Uber versus Lyft. You have a heat map of payouts in your area. We have a ChatGPT integration. We call her Amy, and you can ask this agent anything like, help me earn more, and she will immediately access your data and compare it to data of similar people in your area and help you understand why other people in your area are making more money. Maybe they're working at different times, but there's higher demand for the service, so the payout is higher. The creators are going bananas with this tool because it helps them see how they're monetizing their content differently across different platforms. The same content can be making different income in different platforms, and you suddenly have this global dashboard, right? And then we use this data to build an alternative credit score that we offer to our banking partners. Without your name, it's not without identifiable information, but they get to see that there is a user with an alternative credit score with an income range, with an asset range, with an identity range, where they can a stability profile where to whom they can offer pre-approved bank offers, right? Credit cards, loans, insurance, you name it, and it's always all everything for free for the gig worker. But in the app, they will suddenly get pre-approved bank offers, and it's truly pre-approved bank offers. We're very proud of the high conversion of the products we offer because, again, we make sure to fight back with the bank if you actually get a pre-approved and then you click on it and you go through a process and you get denied. We want to know why, because we want to make sure that we're able to filter out that because it's the best experience for anyone, both the banks and the gig workers, because the gig workers are tired of being denied financial products, and the banks have better things to do than use resources to analyze potential clients that we could have filtered out if they had given us the right information, right? So this is one of the only two products that Bankuish has ever had and will ever have, which is the marketplace product, which is our app. And then we have the customer insights product, and that is our white label solution. So this is using our technology in the bank, in the insurance provider. So some of the largest banks of the world, some of the largest insurance providers of the world have used our technology and currently use our technology to be able to assess who within their current stock of clients are gig workers or freelancers. Again, because they run through their data lakes, our code, so they can see, hey, it turns out that you have 1 million people that are being paid by Uber in your accounts. Okay, so to those people, we help them craft a message where they can integrate our technology. So we say, hey, Josh, we see that you've received payouts from Upwork and Fiverr, right? If you were to connect these accounts through these buttons here that are powered by Bankuish, if they're co-branded, or just powered by the bank if it's a full white label, we can upsell you. We can offer you better financial products, right? We can offer you more. Very rarely do we offer less, because again, having more information about your income is better than assuming you don't have it. And that helps them upsell their client base. It helps them just better bank. We've had U.S. banks. One of them came to us and said, we have 10 million clients in our current stock of clients this is a U.S. bank that came to us and said, we have 10 million clients in our base that we know are gig workers, that we offered them a checking account and a debit card years ago. And we waited. Our plan was to just wait and see if we understood their income movements, right? Their balance sheet movements. And years later, they haven't understood it. And again, because they only see a very noisy, very bumpy income stream. They don't see the data that we have, where you can see that, you might be a developer that has a wait list of projects. And yes, sometimes a project is bigger, so it'll take you 3 weeks before you get a payout, but then the payout is very big. So those things would be scary for a bank until you see behind that wall, you get to see that person actually has a project that, if you break it down into the hours that he's worked, he's actually more or less making the same per hour, and he's working the same amount of hours. And then, it's just that the project size is irregular. Same thing for an Uber driver or a DoorDash courier. And it's and then they get to smoothen out this data and feel more comfortable finally monetizing these individuals, because in this case, it was a bank that had millions of clients they were losing money on, right? Because in majority of them are young. They're not being charged maintenance fees on their accounts, but they're also not making money with them from credit card lines or loans or auto loans or anything. So again, it's a win-win. The gig worker gets more access to fair financial products from reputable financial institutions. We only work with fair, reputable financial institutions. And these institutions get to better assess the risk of these individuals and be able to monetize them better.
So for the source of the data, the platforms, so I think you mentioned you had partnerships with them.
Yes.
That's how it's working?
We have what is called, so we have 3 levels of partnership. We have what is called whitelisted API keys. So this is when the gig platform knows that we're connecting on behalf of our users to their accounts with the user and password of these individuals, and they keep us abreast of back-end technological changes so that connections don't break, and we have a friendly relationship with them, and they understand that we're helping them. So for example, that's happened with gig platforms that some gig platforms approach us. Again, also the gig platforms approach us and they say, hey, in this country that we operate, so this was in Mexico. It's like, in Mexico, we've identified 70,000 earners that want to work for our platform, but they need a vehicle. And the typical down payment this is crazy. That's it. When I was first introduced to this was like 4 years ago. It was early on in our journey. I was like, the typical down payment of a car in Mexico is 70% of the value of the vehicle. That's an insane down payment, right? Only 30% of a vehicle is actually financed. And that's just not a reasonable amount that you can expect a gig worker, a driver, to be able to pay. And so we set ourselves to speak to all the financial institutions that used our service to say, hey, we have a huge need to finance tens of thousands of vehicles. And we have the data to help you, feel comfortable financing a higher portion of that vehicle with these individuals. And it was a lot of work, but we were able to finance thousands of these vehicles and to help finance, to originate the financial. We don't do any financial products, right? To help originate the financing, the auto financing of thousands of these vehicles, all through the leveraging of the data that we have. And this was the gig platform approaching us, which is very interesting, right? There's needs on all three sides.
Okay, so just so I could understand it a little bit better. So you have the banks on one side, and you're providing them the information from the gig platform on particular clients so that they can get the financing they need. The platform that you have partnerships is allowing you to use the data with whatever permissions are required.
The user has to give us the permission, right?
The permissions.
Yeah, the gig platform can give us the connection, so they won't try to. In all honesty, if they let's say that, and this is our case, right? Some know that we exist and we have a partnership with them. What we call whitelisted API keys, which is having an API key to their system so that we can, again, with the user and password that the user has to give us. So the user has to give us their login information. We can't otherwise enter. So we need the permission of the user. When the user gives us their user and password and they accept our privacy policy and terms and conditions, they're accepting that we are entering their system in their representation for the purposes of analyzing their data for creditworthiness analysis, for the approval of these products. So that's one scenario. The other scenario, which still happens, right? We are connected to dozens of these platforms, and we haven't had time to reach out to all of them. So sometimes we just connect on behalf of our users, and this is perfectly legal because, again, the data is property of the user. That said, we want to make sure that the gig platforms know of our existence. So we're still doing all these outreach to more and more of these gig platforms, saying, "Hey, we're accessing your database on behalf of all these users. We want to make sure that this is something you understand that we're doing and why we're doing it, and we don't want you to think we're like hackers or or we're doing this, we're not doing this well." So that's something that's still ongoing. But to be clear, we still connect to these platforms, even though we haven't had time to build these relationships with some of them because, again, just time. We've connected dozens of these platforms, and it is perfectly legal in the end to enter the account.
I understand that part. That's where I'm going with this question is, what the gig platform wants is that they have more gig workers, and their gig workers have the cars or they have whatever equipment is needed, and that they're able to get the financing to get the equipment needed. What I wanted to know is, how does the gig worker know that these people need cars or they need this or they need that? I mean, if an Uber driver's car breaks down, then he just doesn't sign on for the day. So how is that information being collected so that the gig workers could be like, okay, I don't need to charge you anything to use the data because it's going to benefit me if our group of workers are able to go get financing?
Yeah, so that's a great question. So every single gig platform that we've spoken to has earner relationship managers. So these earner relationships divisions are entrusted in understanding the pain points of their earners. When you manage a marketplace, you need both the demand and the supply to work, right? If the worst thing that could happen to DoorDash is if you suddenly go and order something and no one will deliver, no one is there to deliver, right? There's no DoorDasher available, or no Lyft driver available, or that's the worst thing that could happen to them. So they want to make sure that they have a workforce that can match their demand, and that's not always easy, right? I've seen them. I've seen them evolve, right? I've had conversations with a lot of these chief business development officers of these gig platforms. And sometimes they'll be very comfortable because they'll be like, oh, we have more supply than demand. So, we we can talk in a few months. And other times they're like calling me because they're like, okay, we have more demand than supply. We need this supply. And we've been talking to our earners, and it turns out that the main issue is they don't have a vehicle or they don't have insurance, and they changed the regulation. Now they need this kind of insurance, but no one will give them insurance that is payable, so they're not doing it. So they're not compliant. Others will come to us and say, they're complaining, right? Our earners are complaining to us about this, access to this sometimes it's financing a terminal like a mobile cell phone. Sometimes it's it's all of these things, and we help them, right? We have already the network of the banking institutions and the insurance providers that use our data, and when we know that a gig platform is having a pain around something, we go with transparency to our partners, our banking partners, and say, hey, there is this need, just like we did with financing a vehicle. Said, hey, there is this need. This is a big market. You guys are up for a lot of upside if we play this right. Let's try to find a fair product, and we do this with the whole market of banking partners that we have. Because again, I believe the building up market is the key for us to getting the best product out there. I love this interview. So a year and a half ago. Wow, it's been a while. A year and a half ago, I did this kind of tour around a lot of our markets, speaking to a lot of our users, right? A lot of our power users. And I don't forget this conversation with Cesar. He's a designer on freelancer platforms in Mexico, right? And he's making, I think it was like 7 or 10 times above the minimum wage in Mexico. He was definitely above the average. He was very comfortable. And he was completely unbanked, right? And he was completely unbanked because, again, he was trapped outside of the system. He was a contractor. He didn't have a salary, so no one would give him that first loan. So therefore, he couldn't build that credit history of repayment because he didn't have anything to repay. So until someone gave him that first loan, he was out of the system. We helped him get that first loan with a bank. And it was fascinating because when I had the interview with him, he told me, no, actually, I'm still repaying a loan from the same bank. It's the fourth loan. I can't remember if it was the third or the fourth loan. It's the fourth loan that I'm paying off for, the fourth consecutive loan that I've had from this same bank, and I've all gotten them through Bankuish. And I was like, wow, wait. Once you get a financial product from a banking partner of ours, you are a client of that banking partner. Why would you come back to Bankuish to get a new product from that same bank, right? It's like, imagine you get to, through Bankuish, or through Finance, you get a loan from Chase, and obviously you have to open an account with Chase, and now you're a Chase customer. And then suddenly you get your next loan with Chase through Bankuish. Why would you do that? Well, you're already a client. It's like, yeah, I'll explain, because he told me that none of this was planned. I was surprised. He told me like, yeah, no, they offer me better better terms through your app than they offer me directly as a client. And I'm like, why? Why would they do that? It's like, yeah. And he told me like, I assume it is because in your app, they are competing against other financial partners that are also offering me pure approved offers. So they have an incentive to improve their offer versus what all the others that are offering me pure approved offers now through your app. Versus when I'm just their client, upselling me, they have no incentive on making a better offer. They're just upselling me.
So you have a reason in there to keep it sticky, so they stay in.
Exactly. So that's we discovered that they end up having a lot of products from the same institutions, not just different ones. Because these institutions make better offers in the marketplace because there's competition.
Very interesting. So just to kind of play on the award that you won recently, where do you see Bankuish 4 years from now?
Yeah, that's a great question. So our vision is to eventually become the credit bureau of the future of work, right? We want every bank and every insurance provider in the world to use the credit bureaus, the traditional credit bureaus, and us when it comes to assessing the creditworthiness of contractors, what I call tech-enabled contractors. So people that don't have a salary, but make their income through a tech platform that we can connect to. And it has to be a source of truth, right? We can't, I always, so we got, a few years ago, we got the Intuit AI for Prosperity Award. And we got this question a lot, is why don't you integrate with QuickBooks? And I said, because QuickBooks is not a source of truth. You can say that you've made a lot of money on QuickBooks. It doesn't have to be true, right? When you give us your user and password to Uber or to Upwork or to X, we see your payout. It is a source of truth. We see your payout directly from the paying entity. So we can confidently share this information with banking partners. But as long as it's a source of truth, we're there. And like we're talking to the startup team from OpenAI because they created a marketplace for people to build their own agents and monetize them. We want to make sure that we assess the creditworthiness of the AI wave. These individuals are not going to have salaries. I firmly believe that the future of work is not going to have a salary. So 4 years from now, I would love for us to be the leading credit bureau for the future of work, and for every financial institution that is thinking on serving this growing, again, the US is expected to have more 1099s and W-2s for the first time in their history in less than 2 years. This growing body of workers, whenever they're thinking of serving them, that they think of us.
And do you see any, I guess, competing technologies coming in that might either could work with what you're doing or disrupt you? Because essentially you're a form of a middle layer currently.
Yeah. So there's 3 avenues of competition, right? Currently, no one does what we do. So we have I always try to instill urgency in our team and stakeholders and investors, because we have this window right now where we can do this better than anyone. We're the first, we're the first ones doing this, and we can move fast, right? But there's 3 levels of competition that I am sure are going to arise, either 1, 2, or 3, or all 3 of them. The first one is there are currently fintechs that are focused entirely on one of these gig workers, and they analyze their data, right? So there are fintechs that do loans for Uber drivers, and they connect to Uber and they analyze that information, and they essentially will give you, they already know how much you've made, so they'll advance you the money, or so they're already doing a little bit of what we're doing, which is analyzing that source of data to in-house be able to give that balance sheet loan. That I've seen, for example, other startups that do credit cards for creators, right? And again, they measure a lot of the metrics that we measure from these creators. So one is the fintechs that are all in one, one-stop shop for whatever financial product they're offering to that specific niche of gig work. That is one. And I think that if one of them is very successful, we could see them, expand, right? And be able to offer to more types of gig workers and freelancers and creators. And maybe they, like Amazon did with their service, start AWS, maybe they can, if they're massively successful, they could also share that data. And that would be a direct competitor, right? The other 2, so the second would be the open banking company. So there's been an absolute explosion of open banking fintechs. These open banking fintechs, what they do is they essentially do what we do when it comes to connection, but they do it to banks, right? They connect to banks so that, for example, when you're going to go ask for a loan, they ask you to connect your bank account, you put your user and password of your bank account through this open banking entity, and they can analyze your transactional information from that open bank, right? Again, as I've hope I made clear, because I always try to make sure that people understand that information is not sufficient when it comes to gig work, because it reflects a lot of instability that is not true, that is not real. But maybe one of these open banking entities would be so massively successful that they would be willing to expand into gig work, right? Into proof of work, into proof of employment, into our category. And then the third one and last one, and honestly, I think the least urgent, is traditional credit bureaus. So traditional credit bureaus are humongous institutions, right? They have a lot of money. They are very big. TransUnion, Experian, and Equifax, that big 3 are, and FICO is doesn't have their own data, but they analyze the data of the credit bureaus. So, maybe they could expand as well. They could try to do this. I think that is less urgent because I don't know if you know this about credit bureaus, but it's amazing. They've managed to pass laws that force their clients to use their products. So it's like if Coca-Cola lobbied their way to forcing all the restaurants to sell you and force you to have a Coke with your meal, like to buy the Coke. You might not have to drink it, but you have to buy it. They essentially did that, right? In the US, any financial institution that wants to give a loan or credit of some sort has to run your credit check. That is a legal obligation. They have to run your credit check and therefore pay for that. And then they can do whatever they want, right? Your credit check could be bad and they could still give you a loan, but they still have to run your credit check. So when you lobby that kind of rule into law in the US, that comes with a lot of regulation. So currently, the definition of risk that credit bureaus in the US use is pretty much enshrined in law. So if they wanted to start adding these alternative sources of data that we use into their credit scoring, they would have to change that law. They would have to lobby for the change of those laws. So that is why credit bureaus, I think, have built their own inability for dynamic change, for evolution, is because they had the possibility of forcing every bank in the country to use their product and pay them for the product for every time they wanted to issue loans or credit. But to do that, the downside of that was that they had to lobby a lot of what they do into law, which makes it hard to innovate, right?
Yeah, I'm pretty sure. I mean, I'm not 100% certain on this, but I think Canada only has two credit bureaus, or at least that are primarily used. I mean, if you get a student loan, there's only one of these two that you would be using. And I know from a lot of retailers, they typically only use these two. I don't know if there are more, but I'm fairly certain there's only two. And I think one of them is somehow connected to the American one in some way.
Yeah, I mean, again, we're not present in Canada. I don't have. I'm searching it as we speak because I'm so interested. So here's the thing: when in Brazil, Serasa is 100% owned by Experian. In Mexico, the Buró de Crédito is owned by TransUnion. Like Experian, TransUnion, and Equifax, the big three of the U.S., own either part or all of all the major credit bureaus of the markets were present. So I wouldn't be surprised here. In Canada, the two main credit bureaus are Equifax and TransUnion. Okay, so there you have it. Both of them are American. So Equifax and TransUnion dominate Canada, just like just like Equifax, TransUnion, and Experian dominate all the markets that I've researched. It's amazing. The big three credit bureaus have managed to apply their way of doing things and their companies into all the markets that I've researched so far. I'm hesitant to say all the markets in the world because I haven't researched them all, but I've researched dozens of countries, and it's always TransUnion, Experian, and Equifax. That makes our job easy because it makes that it's a cookie cutter solution when it comes to offering our solutions into the banks. As you were saying, what we do is the same in every country because the constituents that we're disrupting are the same. But it reminds me a lot of
you could probably follow it through trade agreements. So if you're following trade agreements, and if there's certain American banks, it's probably likely that those are the credit bureaus in those countries.
I'm sure you can tie this to manifest destiny and expansionism. I am sure. This reminds me a little bit of Bill Gates when he was talking about, he had this kind of he was trying to fight I can't remember, malaria, I think it was, one of these diseases that in Africa is spread a lot by feces and stuff. And he was amazed at how the U.S. companies that manufacture the toilets, they managed to use the same system and sell the same system to places where the infrastructure just wasn't there. It didn't make sense, right? Chemical toilets make a lot more sense in rural areas in Africa than a toilet that you have to flush down, which requires water. It requires a lot of all the tubes and all the infrastructure that we take for granted that is just not there, right? So I think of credit bureaus the same way. They have something that worked in the U.S. and they just applied it everywhere, even though in a lot of these countries it just didn't make sense. And then you end up with situations like in Brazil, where 70 million, half of the adult population of Brazil, is negativado, is rejected by the credit bureaus. That is, it's insane, right? it's crazy. I was like, well, just look for a more fair system that applies to that market. Nah, we're going to use the same system that works here everywhere else.
So are you, I guess what's your trajectory for more global expansion? It seems like you were pretty much global first. You're already on like what, 3 continents now? Are you going to keep going? Or are you going to take some time in the US and focus on that? Like, how does it look globally for you?
That is a great question. So I have an immediate sense of urgency that is twofold. On the one hand is, as I told you, I believe that if you have a solution that helps people, and we have countless of examples where we've been able to help people. When you have something that helps people, you have a responsibility to get it to as many people as possible. So that's an urgency that is part of the Bankuish culture. And then the other is, again, we are first movers, and we have to have defensible positions in as many markets as possible, so that when the copycats appear, and we're already seeing some copycats, we have a defensible position. So we are global first. We are currently so we have teams that are doing back tests with banks in Asia and Europe already. Actually, one of my teams is also doing it with one of the banks in Canada that also has a presence, that also is a client in the US. And we will not stop. That said, the most important market, the most important business that we are focusing on for this year is the US. The US is my biggest concern for this year. It is the thing I will not compromise on. Our success in the US in 2025 has to be palpable. It has to be measurable. It has to be definitive, and it will go before anything else. But we will not stop growing.
So you mentioned the Asian market, and I'm just kind of curious. Like, and I'm not painting it as all of Asia, because I mean, there's different places and they have different dynamics. But it seems, at least on paper, that the gig economy has been a thing there for quite some time. I was wondering if your problem is manifesting the same way there that it has in other places specifically.
So it's for me, it's similar to the jump from Mexico to Brazil. Again, very different countries, and then the jump from LATAM to the US. Very, very different ecosystems, but the data used by the financial institutions is very similar, right? So we have that advantage, that data is very similar. So the way we have to essentially translate this new type of data into that is very similar. But again, everything else is different. So for example, we're getting a lot of attention in India, right? So very large financial institutions in India are looking into our data to better address all kinds of gig work and freelance work, which is massively popular in India. In Korea, we have several banking institutions that are looking into our data because there is, even though Korea, for example, barely has Uber drivers, right? Drivers, but it has massive amounts of two types of very mature, so not fast growing, but very big courier, food delivery services workers, and fast growing freelancers. So it is a social dynamic that is very interesting to study, where in Korea many people are leaving their jobs to do the same thing as freelancers. And then they find themselves with the same issue as in the US, in Mexico, in Brazil, which is that as a freelancer, your 1099 income is not building that positive data in the credit bureaus, and it makes it harder for you to access the products that you took for granted when you had a salary. So again, very different. Obviously India, Korea couldn't be, South Korea and India couldn't be more different.
In Asia, and I don't know if you've come across this, and I don't even know if they can do this, but like, for example, I would say Canada specifically, and even to some extent in the US, there's kind of some rules around monopolizing an entire sort of like industry or segment. And I was just wondering, in any of the markets you're in, and I would say Asia specifically, are any of these gig platforms retaining the data so they can offer financial services to their gig workers direct? So instead of getting a bank involved, they already have the data, and they're just offering these loans, because I think Shopify had something like that in the past. I don't know if they still do, but I believe they were doing something like that.
Most gig platforms either do or have done in the past offer some form of financial product. It is, it's hard, right? So I've seen it a lot. So Rappi, which is kind of like the DoorDash of Latin America, they're very big. They have a huge presence throughout many countries that are very different from either, and a great example of how to do something well in a lot of very different environments, very different countries. Rappi, they bought a bank so they could offer loans to their couriers and also to the restaurants that these couriers are serving, and they did this, and it's hard, just like it was hard for Uber when they did it as well, to offer loans and credit cards to their drivers, their earners. It's hard because almost none of these gig workers work for only one platform, right? Their only source of leverage as gig workers is to be able to change platforms when they're being abused, or when they feel they're not being paid fair. That is their only power, right? So they typically work for several, and they compare, right? They daily compare the 2 or 3 apps to see which one is paying.
That kind of works out pretty well then, because you offer competitive rates by using different partners, as you mentioned like earlier. So
exactly, and the key here is these gig platforms only have the view of their own data, and that's been a huge issue for them, right? When they are trying to analyze who to give, what financial product, they only have the data from their own platform. They don't have the data from the others. We do. So that's where we've been able to have an edge on any of these gig platforms, essentially trying to do everything in-house, right? That, and the fact that we're not one financial institution, we represent dozens, and therefore within those dozens, sometimes we have offers that are better than what the gig platform themselves could offer.
Yeah, no, that would allow it to be more competitive, for sure. Huh, interesting. Well, we're kind of at around an hour here, so I think we'll move into kind of some of the concluding questions. So the first one up I have is: are you currently reading or listening to anything inspiring, or just interested?
Yeah, no, I mean,
you always want to know what the builders are listening to or learning from. So
yeah, no, so much. So I like to read a lot, and I have this thing where I have to read several books at a time, just because I need freshness, right? So I'm multitasking my books, and I have them here. Like I'm reading Next. I'm reading The Worlds I See. I am reading Hidden Potential. I'm reading When They Win, You Win, and then I'm also reading 12 Hours Sleep by 12 weeks old, because I just became a father, and that's becoming a very important thing for me.
Yeah, sleep's always a struggle in general, I think. Okay.
And that said, I also, the one thing I do, and this is something I recommend founders out there to do, is I don't read these books when going to bed. When going to bed, I always read something that has nothing to do with work, right? I love these the Startup Handbook. I love, The Hard Thing of Hard Things. I love all of these books that help you learn from the greats when it comes to entrepreneurship. But when I go to sleep, I need to be able to compartmentalize, the stress and the urgency, and just relax. So when I sleep, I read science fiction, I read fantasy. I've been on a binge where I've been for the past, a few months. When I go to bed, I'm reading the Discworld series from Terry Pratchett, which is this really funny fantasy series of books that I recommend to everyone.
Oh, what's the general idea of that one?
So the cool thing about the Discworld is that all the books, the characters are always the same. It always happens in this world it's this funny, nonsensical world where the world is flat, and it's hauled on top of turtles that are themselves hauled on top of a a giant elephant, and there's wizards and trolls and heroes, but they're like very comical, and the cool thing is that even though the it's kind of like Sin City and all these others where the place is the same and the characters are, you're gonna bump into characters that were the main character in some other book, and here they're just passing by because this particular book is following the story of some other character. But you have this just amazing Terry Pratchett, the author, has this amazing ability to teach you something about human nature while making you literally laugh out loud while reading it, and draw these worlds that somehow mirror our own when it comes to, the craziness of like government or movement or whatever. But
flat earthers.
Yeah, exactly, right. And it builds this huge logic behind it to make it sound very like, oh yeah, obviously the world is flat, and like, and then within it, and then the oceans just fall, and then there's this, it's just amazing how he can do everything. He touches very important subjects in a very lighthearted way, and that's something I appreciate very much.
Oh, nice. And so for tech tools or productivity hacks, do you have a favorite?
I mean, right now I'm just I've become an AI prompting wizard. I daily use Copilot, Gemini, and ChatGPT, and recently I guess I'll tell. I've built my own AI CFO on Chat with RTX. So Chat with RTX is this a local AI model that NVIDIA gives you for free. I have one of these gamer desktops, with all the lights and stuff, and a gigantic graphics card that takes like half of the space of the computer, because I'm one of those guys that like has thousands of games on their Steam account, but in the hopes that one of these days I'll get to play one of them. But you can use that NVIDIA card to run locally stuff, right? And I've always felt very uneasy when it comes to uploading documents that are sensitive. So I said, okay, I built this I put the local model, Chat with RTX, the local AI model of NVIDIA on my computer. And then I just put in a folder all of the financials of my company, all of the product roadmaps, just all the relevant strategic and financial information, KPIs from the company. And then I built a profile for the AI agent, where I say, I need you to give me analysis from the point of view of a CFO. I want these actions to be actionable, these insights to not just be analytical, but to be actionable. And then I just ask it questions, right? Like, for example, what is our least performing product? And tell me, sometimes I just go crazy and say things like, tell me something that is not obvious about my company that people would miss. And it just says amazing things. And then you're like, wow. And then you go down the rabbit hole trying to understand it further. And it's simply amazing. And the good thing is it all stays local, right? Nothing goes out. So you can be sure that no one's training their next AI over your sensitive data. And it's amazing. It does get hot though. It's like running a very demanding game, right? Because it's running all of these things locally. So after a while of doing this, you realize that you're like sweating because the room is just so hot because the computer is burning.
And so what health and wellness hacks are you doing or attempting to do?
So I go to the gym every morning, right? That's I do two things, right? I go to the gym every morning. And when I say every morning, is I mean every morning, because then eventually I get to do it like 4 or 5 times a week, which is my end goal. But if I would say I'm going to go, if I would tell myself I'm going to go 4 or 5 times a week, I know I'd go 2. So I try to go every morning. Just sometimes my baby won't let me, or just life. And then I play paddle with some friends here in Miami. Paddle is this kind of like tennis in a mini court that you get to use walls. And it's, at first it seems very chaotic because you get to use the walls to bounce off of, and then balls are going everywhere. But then it becomes very strategic and a little bit less demanding, because you get to like wait. You don't have to rush for the ball. You get to wait and let it bounce off from the back wall, and then you can return it. And then when you get to my age and your knees start to remind you of your age and stuff, it's a welcome gift to be able to wait for the ball instead of running to it.
So will you be picking up pickleball soon then?
Yeah, I mean, I've tried pickleball once, and it's actually fun, right? It feels weird because it feels like toys. You know, the balls have little holes and stuff. It feels more toyish than tennis like, but it's fun, and it is. No matter how hard you hit it, it's going to slow down. So it's also kind of like more tactical than it is physical, which is something that I think you get to appreciate when your body starts to remind you that you don't have the age you think you have.
Oh yeah, that pickleball is just exploding everywhere. There's like all these new courts in my city that people are putting in just because there were waiting lists. Ones. Yeah, it's gotten pretty popular here for sure. I don't know if that's a reflection of the entire world, but I could say for at least this part of Canada, it's definitely taking off.
I read that the pickleball leagues are the fastest growing sports league in the U.S. So, so there's something there.
Oh yeah, definitely. And then the last question, looking back on your experience, what advice would you offer to your younger self or an aspiring entrepreneur?
Right. So, this one I feel very deeply. I feel that the journey is all that matters, right? If you're going to get into entrepreneurship, I would tell myself in the beginning of my journey, because it would make everything so much easier, because it does now, that if what you're doing, if your mission or the people you're doing it with, or the actual, if what you're doing is something you enjoy, right? That's all that matters. For me, the way it's not necessarily the way that everyone should frame it in their mind, but the way I frame it in my mind is, if I knew I was going to fail, no matter what, would I still be doing this? And I would, right? And that's the moment you know this, then everything is just less dramatic, right? Because there's going to be so many ups and downs. It's just such a crazy roller coaster. The whole starting a business and then growing the business. It's always the roller coaster never ends. People think, when you're bootstrapping and you're eating your savings, that's unnerving. It is, but then you raise millions of dollars from investors, and that's unnerving as well. And then you hire dozens of people, and that's unnerving as well. And and then you have a lot of clients and a lot of users, and they're depending on your service, and that's unnerving. So it's never gonna not be. What you have to do, and there's always going to be bad moments, and the only way I find that I can catch myself pausing in the middle of all this madness is when I realize I'm doing something I love. So I get to succeed every day that I do this. And if it's going to be the rest of my life, that'll be great. And if it's only a part of my life, then that's a part of my life that I'm succeeding. That's great as well, So I would say just do something you love. Either the mission, either the actual work, either the people you do it with. There has to be something that you love. And then realize that the journey is all that matters, that doing it every day is what matters, and not the end goal, not the destination. And for me, that gives me so much pause. It makes me just be able to watch everything with a little bit of kind of like through a screen instead of intensely in it, because I get to admire the fact that I got to build my dream job, right? It's and it's not easy, and it doesn't always, sometimes it feels like it's gonna end, or it's not great, or things aren't going well. That's always gonna happen, but you get to do your dream job. That's the whole point of entrepreneurship for me, is you get to build your dream job. So what I would tell founders, aspiring founders, or myself early in my journey would be, do something that you like, and make sure that even if you knew you were going to fail, you would still want to do it, because that's how I approach it. It's like I know I go to play paddle and I'm not particularly good. I know I might very likely lose that match. I'm still going to enjoy it. I look at entrepreneurship the same way, and I think that philosophy allows me and the team, because I tell the team all the time, failure is an option, right? So that's my kind of like my phrase is, guys, failure is an option. So once we know that failure is an option, we get to free ourselves and make more bold moves, and make just build bigger things, or think in different ways, because failure is an option.
So focus on the journey with something you love, and build your dream job. Is what I'm hearing. So that's awesome. So with that, that's kind of all my questions. Is where can people learn about Bankuish? Where should they follow you? If you could share that info.
Of course. So it's bankuish.com, bankuish.com. And for our flagship product in the US, it's Filance, which is a fun play on words between finance and freelance. Filance.ai. So FILANCE.ai.
Okay, awesome. I'll share that in those links as well in the episode description. So thanks a lot for your time, Jose. It was a great conversation, and I look forward to catching up with you in the future to see where you land.
Thank you so much.
Next market and destination.
Thank you so much for having me, Josh. It's always fun to get to pause and look back, and I appreciate you giving me the chance.
Awesome. Thanks.
You can find information about the Candid Capital Podcast on the website, LinkedIn, and Twitter. Episodes can be found on Spotify and other podcast platforms. A quick reminder that this is infotainment and is not intended to be professional advice, malicious, or hateful. The views, information, or opinions expressed during the podcast are solely those of the individuals involved and do not represent those of employers, partners, and their subsequent connected private and public associations or organizations.
We candid, I hope you understand it. Your business growth, we planned it, yeah. This ain't for show, we stamped it, yeah. No FOMO, everyone come join, no solo. This all factual, from me to you, this Candid Capital.